I think there's also a consideration of consumer data protection within this as well, right? Like banks have very serious regulatory compliance around protecting your data, right? A fintech does not necessarily have that same requirement to protect your data. So there's also concern about if these companies fold and they're trying to recover assets or they're trying to basically get sold off, right? Just then all of the data related to their customers, does that have a value? Can someone buy that, right? Like, we know what all of these customers, we know all of their spending and savings habits. So I have concerns over, consumer data protection as well. If you're not in a strongly regulated industry, who's protecting your data?
That is a good question, but I think some of the fintechs too. I read a little bit more deeper into these. That fintechs normally and generally work with small banks just to really just keep them alive, right? And to avoid the regulations that these big, Wells Fargo, they have to go around it. So I think that is becoming a more and more bigger issue too. For, like you said, the privacy, the security of the data. So I believe that is one of the biggest issues as well. But their fintechs are going to smaller banks, and those smaller banks are partnering with them because it's like that's the only way they can compete with a Bank of America or anything like that.
Yeah. The smaller banks, right? They're looking to grow. They're looking to find new revenue sources. And so these types of arrangements are very attractive to them. But also at the same time, you don't have the same amount of resources to dedicate to maintaining those connections. Speaking of growth in payments, we got an article out of Fintech magazine, which is basically covering a Boston Consulting Group's assessment on the payments industry reported by Louis Tomset here, which is basically saying that there is a slowdown that's predicted to happen by 2028, with essentially the compounded annual growth rate coming down from 9% to 5% by 2028. And this, I feel like, is a very investor forward article, which is basically like if you're looking for high growth and you're looking for fast and big returns in the next 5 to 10 years, payments companies may not be, spurring on that rapid, intense, meteoric growth because the market's starting to get saturated, right? And these numbers are nothing to shake at, right? Like, all right, still by 2028, the market will grow from 1.8 trillion to 2.3 trillion, right? Those are massive numbers. It's more so, at least my read on this is that it's more so about if you're looking for growth. I think what's kind of funny, and it made me kind of laugh, is we just covered an article that had a very negative outlook on fintechs as the continuing on of banks. And this article kind of says the opposite, that actually fintechs are going to outpace banks. I think the thing that this article from Fintech magazine doesn't really cover in that conversation is what the other article covered really well, which is regulation. Any other thoughts from anybody else?
I would like to also say that I think as we can see the graph 21, the COVID years were crazy from a valuation perspective. I think it was just so unreal. But now it's time to think much more realistically. And now, as we were saying, that the cash is expensive, things tend to make much more sense. And even there, we see how big players like Stripe or Adyen still have quite surprising forecast. And even though they have those forecasts, they are seeing their valuation getting a bit lower. And the reason is indeed because investors were they were thinking for some reason that those volumes would never stop increasing. So overall, I think fintechs is still great and will still be great in the years to come, but mostly for the big players that have money, or the smaller players will need to partner with banks. I think that's some of the conclusions that I also take from those two articles.